I'm Michael Silva, and you are watching The Weekly Scan.
The Weekly Scan.
The Weekly Scan is all about finding the opportunities in the stock market for the week ahead. Today's date is March 29th, so I am talking about Monday the 30th when the stock market opens. And as for a quick disclosure, these videos are for entertainment and educational purposes only. I am by no means a professional investment advisor. If you do not have experience in the stock market, please just, don't take all these opinions seriously, okay? It may work out, it may not, I don't know, but I don't want you losing money, yeah. Now, with that said, let's go ahead and hop into today's show.
Okie dokie, alrighty, arky dokie, artichoke, however you say it. We are in the computer and we're gonna go over the three ticker symbols, starting with Marathon Oil, ticker MRO. This little guy is looking pretty cool, man, pretty good. I'm just gonna walk through a couple of the indicators that I see. First being the RSI, it is oversold territory. It's been there for quite some time. That's one thing, okay? So we have a lot of buyers kind of thinking, hey, it might be time for a little bit of an upswing is what I'm seeing there. The MACD, it just crossed over recently. However, it is still below zero, so can't hold too much weight to that, but that is bullish in a sense, okay? And then we got a lot of volume coming through. Ooh, look at all that volume. Comparatively to its previous, back all the way down to here. So we're having more volume come up. Get those out of the way. Now, the pattern that I'm seeing here is a descending triangle, which isn't always, it's not always bullish, that's for sure. But I'm gonna give you a couple pointers here. That trend line right there, it looks like it's been trying to kind of hit above it. And then you have this area down here for the support. So it comes up, comes back down, and then tries to come back up, pulls back down to this range, tries to go for it, pulls back again, then tries to go for it, and then it's pulling back again. So can we see this thing break to the downside? Absolutely. But can we see it potentially break through this trend line? Well, yeah, especially if the volume starts elevating up more and it breaks up to that on the upside. We might see this thing kind of go on a little run. Could be even potentially hit this $7 range. And we're talking from $3 to $7. That right there is a pretty large percentage point gain. That's, over 100% gain. So yeah, and then also then it has the previous candle here. So maybe the $5 would be the first target up to $7. So how would I play this? I would play it like this. It looks like it had a big down day yesterday, down 10%. Now keep in mind these percentages, small, from going from 350 to 325, that's a big percentage point loss. So you don't load the boat on this kind of stuff. This is just, keep that in mind. Never load the boat on anything, to be honest. But yeah, I'm thinking we might see potentially a little bit more of a pullback. And if we do, that'd be an amazing opportunity to pick up some more shares at this 335, 325 range. And then your risk, your stop loss can be, the lowest point so far was 320, so 318. Yeah, so you're basically going from 318, maybe pick up shares at 335. We're talking not that many cents per share loss. So I would play it like that and then hope for the break to the upside. And then if it breaks downwards, I'd just get stopped out. So that one is a great risk versus reward because yeah, you might see 100+ % gain there. Obviously, you want to take profits off, while it's going up. It's going to be hard to be wait till it reaches all the way to 7 if it ever does. But yeah, you can take profits off maybe at 480, 495, and then if it breaks through, cool. Then you could take more profits, let it run, see what happens. But that's MRO for you. I'm going to be keeping a close eye on this in the trading week ahead. I would love to see this one break out. All right, this is ticker symbol BKYI for BioKey International Incorporated. Here we go. This is a wicked chart. I feel bad for a lot of people that got hyped into this because although it had a 94% up day in one day, you might be thinking, whoa, people made a lot of money. Yeah, but there's people that lost a lot of money, and let me tell you why. This little guy is known as a gap and trap. So it gapped up from this day, and then this was the previous day here. So it went from down here from 51-cent low to a $2.60 high. So it's just a monster move. It opened right here, okay? And then more people bought into this rally. They're like, oh, buy into the hype, and then boom, just all day long, just. So it probably just trapped a lot of those buyers, hoping and praying that, hey, hopefully this comes back up. And, you know, imagine being at $2.60 or $2.40 and then seeing the price come down all the way to $1. Man, that is just crushing right there. It's 100% loss. It's crazy. So mind that. Let me show you what I do see. That could be potentially a great risk versus reward for anybody that is watching. I'm seeing that there's a previous area of support down this range. There we go, 80-cent range. So the price is up here at $1.05, but this candle right here kind of indicates that, hey, there's going to be more downwards pressure coming up, especially on this high volume that came in, right? So I'm thinking potentially this could be a really good risk versus reward. So we can wait for it to pull back more, pick some up at the 81-cent range, and then have a really tight stop loss, maybe just right below the 200-day period moving average. And then try to just go from there. So from 0.81 or 0.82 or 0.83, 0.85, whatever you feel comfortable with. So this was 0.84 here. So yeah, maybe you want to get at 85 cents, but then have your risk, your stop loss at 75 cents. Okay. Or, maybe a little bit lower, whatever your risk tolerance is. I would keep it really tight because like just by looking at the volatility in this thing, I don't want to lose too much. So if you don't want to lose too much, maybe just reduce your position size. If you want a longer stop loss, maybe you want your stop loss way down here. Okay, then just take less amount of shares. But what I'm seeing is potentially it's going to bounce off this previous level of support. And well, it's actually acted as support and resistance, right? So it came up, so it was support here, broke it, acted as resistance, came back down, and then jumped above it, and then kind of bounced around this area again, boom, boom, boom. So I'm thinking this range right here, it's gonna act as support now. Once resistance is broken, it then becomes support. And same with support, when that becomes broken, it becomes resistance or whatever. So yes, I'm thinking right around this range here, the 80-cent range, and then we might see it move to the upside again. Ooh, which could be cool, picking up stuff at 80 cents a share, and maybe, selling some profits up here at this, $1.20 range, maybe just a little bit lower than that. But that'd be a monster move from 80 cents to $1.20. You can make a big percentage point gain there. So that is what I am thinking on this chart, BKYI. It looks good. It looks good to me. As far as the indicators go, I'm really just looking at that monster volume. That's the really one that's only showing me anything. RSI is not really showing me oversold or overbought. MACD, it just kind of crossed over into bullish territory. It's just above. It's a little bit below zero still. It's not really giving me too much data, but yeah. So that's BKYI for you. Let's go ahead and hop on to the next one. All right, we are here at the next ticker symbol, NVDA. My wife is creepily staring at me from the weekly scan. Okay. We are back in, okay, that just shook me up a little bit. Here we go. The weekly scan. All right, back to work. This here is ticker symbol NVDA. It is for NVIDIA Corp. NVIDIA Corp. Now this is different. I usually talk about long positions, but this time it's going to be a short position. This is what I'm seeing. It actually looks familiar. Chart. It looks kind of like the Dow Jones. It looks like the S&P. It looks like a lot of what's going on just tracking the markets. But let me walk you through my thought process here. Okay, so where are we at? Here we go. Boom. Boom. We had this kind of pullback, bounced up. This is what looks really similar to me as far as the other charts. The Dow Jones goes in the S&P. We're kind of seeing something very similar here, and I'm somewhat bearish on those charts. So we're seeing this monster move up these last couple of days. This 1, 2, 3, 4, 5, 6, 7, 8 days. It's been on this monster tear up, and something that stands out to me here is these 3 last days. these 3 last days have long upper wicks on them, and this previous one right here is known as an inverted hammer. So they got all bumped down around this range as a right here. Let me see if I can draw this out. Let me see. So 261.08 basically. So right around there, it's acting as an area of resistance for this chart. And I'm thinking like this could be a really good risk versus reward trade on a short position, because it looks like with these long wicks, it's kind of running out of steam on the upside. So we might be seeing a pullback. Oh, thank you. Look, oh, a beer! A beer.
A beer, that's a beer.
So what I'm thinking is, I'm thinking that because of these long wicks, we're starting to see a lot of pressure to the downside. We're starting to see the steam kind of run out of this engine that just rocket shipped up. And I'm thinking, hey, we might be able to pull in right here. And by the way, it's also happening at the 50-day period moving average. Boom. So I'm thinking, hey, we can pick up shares basically right now all the way up to this line, basically this area from, 252.73, or maybe a little bit lower, depending on where it opens tomorrow on Monday, up to the 260 range. We can go short and then just kind of capture onto the downside. Now, I gotta tell you, like, if you're shorting, you need to be pretty aggressive on your profit taking, because if you're not, if you leave this stuff around or overnight, which I'm not a fan of holding short positions overnight per se. I don't typically do it. Doesn't mean that you can't do it, but I just don't want to wake up and it be at 320 and I took a short position down here. Like, that just does not sound good to me. And yeah, it can happen on the reverse if you were to take a long position and it gaps down. But the thing is, when you short, it can go up to infinity. When you go long, it can only go down to 0. So you need to be aggressive with your short positions. If you're not familiar with shorting, I would highly recommend just not even playing around with it until you feel comfortable. Or if you want to learn how to do it, do it with paper trading, or go, just take a really small position size, I guess. But yeah, I'm thinking here on this chart, it's going to follow with the markets. I think it's running out of steam here, and we're going to see this move to the downside. So next question would be, where do you take profits from? Well, I think the target would be I think that the target would make sense right around the 200-day period moving average. So it's going to be floating around this $210 range. I think that would be a good area to take your profits, or at least have a profit for the target. I would also probably take profits around this area, 230, where this candle kind of was, because we see it kind of back test through history through here. So I would be thinking about that as well. Got all kinds of markings on this, but yeah, that right there is ticker symbol NVDA. Sorry, I got distracted. My wife does that to me sometimes. But yeah, I'm thinking it's gonna slow down, and we're gonna see this curl back down to the downside. Cool. Okay, so that is the 3 ticker symbols that I have for you today. We had MRO, we had NVDO, and then we also had BKYI. Everybody, have a good day, and I'll be back next week with the weekly scan.